Alright, this is gap the daily time frame as well. So this is pretty similar chart to the one we just looked at. Let me get this thing off here. The 200-day moving average is the orange line, and you can see the high a day on this day hit it, and it pulled way back and closed down here. Came up again, high a day hit it, couldn't close above it, couldn't close above it. Finally it opened, gapped way up here and opened, but it sold off the entire day and closed way down here and then pulled back below it again. So it's unable to keep it as support. And then since then you can see high a day hit it, pulled back, closed down here. High a day just below it, closed down here. So every time it keeps getting rejected, which is showing that it is pretty strong resistance. You've also got a bearish MACD cross, which means when this black line crosses the red one, it's bearish. When it crosses it the other direction here, it's bullish. It's one of my favorite indicators. It does a pretty good job. But yeah, it's the same scenario until it can get over the 200-day moving average, and the 100-day moving average is also right here. But until it can get above those levels, I wouldn't be a big believer in it. Looking at the weekly chart, now each one of these is a week. It sold off in October just like everything else and had a nice bounce. But you can see it got above the 20-day moving average here, but it got sold off, was unable to close above it, and then pulled back because of that. Just an example of how well these can work as targets for this week. You know, the high a day hit directly the resistance, the 20-week moving average resistance, and the low of the week bounced directly off the 100-week moving average support. So you can just see it's a good target that people use, and it's kind of a self-fulfilling prophecy. If more traders are looking at the same thing, looking at the same points of support and resistance, it becomes a self-fulfilling prophecy where, you know, people know this is support, so they're going to place their buys there, and then more people will see the bounces coming and more people will buy. So kind of self-fulfilling prophecy, like I said. I just pulled up Under Armour because I know it's a pretty hot retailer right now, and just to give you an example of, you know, we're having moving averages as support rather than resistance. You can see the 200-day moving average is way down here because it's been on such a tear for the year. But it hit a tie up here and pulled back pretty significantly. But you can see it's been holding this 100-day moving average pretty well for the past 4 days. The levels to get above now are the 20-day and the 10-day moving average. Specifically the 20-day moving average, you can see it got right up to it and then pulled back again. It's a common theme, but you still got higher lows being set, so it looks pretty good in the short term. One thing I noticed on the weekly for a longer term that you would want to keep an eye on is a double top formed, which means that it formed a high, I assume it was a 52-week high here at 72.53, pulled back, consolidated, found support, and made another nice move, tried to set new highs, and this close for this week was 72.49, so it was just below this one, which means it's now a double top, and I would expect some more pullback unless it can bust through and close higher than it. This is definitely the target now, 72.53. If it can close for the week above that, it would be very bullish. But even on the pullback, it looks pretty bullish. You can see it dipped down below these moving average supports, and by the end of the week, it got back above them and closed above them to keep them as support. So that's definitely one to keep an eye on. And overall, the markets, as you know, they're pretty brutal week, but I would definitely see it as a buying opportunity, just because that's been the trend, and until, you know, the trend breaks of buying the dips, I'd probably stick with it. I might even look for some long-term positions in like some Apple or some other big boys, just because it'd be nice to have some stocks where I don't have to watch them every day. This is S&P 500 daily chart. You can see how quickly it gives back the gains. You know, it makes nice slow steady moves up and then just falls off a cliff and loses them all in 1 week. The levels to watch are the 50-day moving average, which is at right now, which is 2,075, so pretty much 2,000. The 100-day moving average below it is 1988, and the big one, the 200-day moving average, is 1946. You can see that on the huge sell-off in October, it got below it, which is what caused a lot of the panic. Once it broke this support, everybody was dumping and saying it's the end of the world. As you know, it had an incredible bounce back, which I did not see coming at all, but no one really did. So yeah, as long as the 200-day moving average support holds, and essentially as long as this dip doesn't get below the previous dip we saw in October, if it doesn't form new lows here, it's going to stay in an uptrend. And that is my brief analysis. Have a good night.